Well, good morning. I'm Jagendra Rana. So, the topic of the day is the nature of marine insurance. The nature of marine insurance. Marine insurance is a special insurance that covers risk of shipping goods by sea. It provides financial protection against most hazards a maritime voyage may face, including piracy, vessel sinking, collision, and natural disasters. So, this particular type of insurance is crucial for businesses engaged in global trade because it covers losses incurred by unanticipated events that might interrupt or damage cargo in transit. So, marine insurance policies can be one of two main types: hull and cargo insurance. Hull insurance covers the ships, its hull, machinery, and equipment, and cargo insurance protects the goods being carried. So, marine insurance may also provide liability for third party claims related to maritime accidents or incidents. As far as marine policies types is concerned, marine insurance policies are categorized by coverage area and plan structure. Some of the major types of marine insurance policies grouped by categories like hull and machinery insurance. So, the hull is the part of the ship most important to avoid damage to the goods within. Hence, hull and machinery insurance provide coverage for damage or loss to the ship's body or machinery. This particular kind of insurance policy typically deals with accidents resulting from explosions, smashes, or another natural disasters. This coverage is generally purchased by the owners of a vessel or ship. Then damage liability insurance, as its name implies, it insures the insured's liabilities. Those liabilities include injuries or loss to a third party. And then flight insurance. This type of marine insurance insures the shipper or logistic company for loss or damage during the transit. So, types of marine insurance policies depends on based on the structure or one transit policy. This type of marine policies covers one transit. This is used by infrequent shippers or those that make shipment just a couple of times a month, and the other one is annual open policy. Such marine policy has an annual tenure but includes all transactions made during the policy. This is a useful policy if you make several shipments per year. As far as the scope of marine insurance is concerned, it extends beyond the protection of ships and cargo. It provides maritime risk management and indemnification, covering all those involved in the carriage of goods by sea. But the scope of marine insurance generally comprises protection against perils of the sea. Marine insurance policies typically cover disasters such as floods, tsunamis, and hurricanes, in addition to man-made perils like pirates, collisions, and theft. Marine insurance covers these risks and ensures that goods reach their destination safely and on time. And general average and salvage cost. General average and salvage cost may occur if a maritime emergency necessitates sacrifice or expenditure to preserve the common safety of the ships and cargo. The marine insurance policies often cover these costs, helping all parties involved in the voyage. Then war and strike risks. Because geopolitical conflicts and labor disputes are unpredictable, marine insurance policies may provide optional war and strike risk. This coverage protects insured parties from losses resulting from war, terrorism, or labor unrest affecting maritime operations. So, freight and charter party liability. Marine insurance may also extend to include freight contract and charter party agreement liabilities. This includes indemnification for breach of contract, delivery delays, cargo damage, and other contractual obligations relating to sea freight transport. That means marine insurance helps minimize the risk and uncertainties of maritime trade. It provides protection for ships, cargo, and liability to all involved in international shipping. Understanding the nature and scope of marine insurance is essential information for companies looking to safeguard their assets and guarantee the efficient and safe transport of items across the seas. So this is an essential part of global commerce and protects against risk of shipping goods over water. It provides financial protection against various perils which might interfere with or damage cargo during maritime voyages, ensuring international trade. So the marine insurance policy is an agreement between the insurer and also the insured, under which the insurer deals with the transit related damages or loss. In case of loss to the insured cargo while in transit, the insurance provider reimburses the insured for all the losses as per the policy. So the policy insures cargo in transit by land, air, or waterways against natural calamities, theft, fire, vandalism, and other risks. So it is tailored to the insured party to factors including mode of transport, destination, type of goods, and value. Policies are divided by coverage area into hull and machinery insurance, damage liability insurance, and freight insurance. These policies provide specific coverage for specific maritime risk, including hull, machinery, or cargo damage, as well as liabilities and transit losses. For the scope of marine insurance also covers all those involved in maritime transport. It includes sea perils, general average, and salvage cost, war and strike risk, and liability arising from freight contracts, and charter party agreements. So this broad scope covers all maritime risk and is insured. So the marine policies or marine insurance is vital to maritime trade and transportation, providing financial security and peace of mind to parties involved. Various types of marine insurance policies are available in the market, each with the features and benefits. So as an insured, you should choose the types of marine insurance policy that best suits your budget and requirements, considering factors such as the nature and the value of the property, the mode and the route of transportation, the frequency and duration of shipments, and the extent and scope of coverage. So by doing so, you can ensure sufficient protection against the risk and losses associated with the maritime transport. So the marine insurance offer comprehensive coverage and at affordable premium rates with customizable coverage options. In many cases, in some countries, due to international regulations, marine insurance is mandatory. It requires ship owners to have insurance to cover to certain liabilities In case of an incident, contact your insurance provider. Promptly, they will guide. And the marine insurance explores the principles of marine insurance, including good faith and insurable interest. So, not only that, shipping industry is exposed to several risks over which you have no control. What if the ship transporting your goods encounters severe storm and cannot withstand it? What if pirates assault your ship and take your cargo? But there is also confusion around international law and shipping industry. That's when marine insurance comes in handy. The Marine Insurance Act of 1963 governs this insurance in India, and it is regulated by the Insurance Regulatory and Development Authority of India. The primary goal of their launch is to compensate for losses connected with the maritime transportation. Damage to cargo, ships and other vessels is among the losses. However, like any other kind of insurance, and marine insurance policy is classed into various types. There are 4 classes, 4 main kinds of marine insurance policies. These are flight insurance. This type of marine insurance deals with the loss of a freight or cargo due to perils of the sea or other causes during transit. Freight insurance. So the freight insurance can be taken by the ship owner, the consignor or the consignee, depending on who bears the risk of cargo loss. But this insurance can be either specific or open depending on whether it covers a single shipment or multiple shipments under a single policy. Second one is liability insurance. This type of marine insurance policy deals with the insured's legal liability from bodily injury or assets damage to third parties due to the insured or their agent's negligence or fault during maritime operations. Liability insurance can be taken by ship owners, charterers, operators, managers or other parties involved in the maritime activities. Some of the common types of liability insurance are protection and indemnity insurance, charterers liability insurance, ship repairers liability insurance. Third one is the hull insurance. This marine insurance policy covers the loss or deterioration of a vessel's hull and machinery due to the seas, perils or other causes. So hull insurance can be taken by ship owners, mortgagees or other parties with an insurable interest in the vessel. So this kind of plan can be either total loss only or all risk depending on whether it covers only the total loss of the vessels or partial loss or damage. And the fourth one is marine cargo insurance. So as the name implies, covers the loss or damage to goods or merchandise being transported by sea due to perils of the sea or other causes. But this plan is ideal for exporters, importers, buyers, sellers or other parties with an insurable interest in the cargo. A marine cargo insurance can be either specific or even depending or open depending on whether it covers a single shipment or multiple shipment under a single policy. Among other type of policies, you will find floating policy, voyage policy, time policy, mixed policy, named policy, port risk policy, fleet policy, single vessel policy, blanket policy, and various policies. So a lot of policies are already available. They are purpose specific, demand specific, and according to the nature of risk, these policies are provided. So marine insurance is vital to maritime trade and transportation, providing financial security and peace of mind to the parties involved. So various types of marine insurance policies are available in the market, each with its features and benefits. Thank you very much.